Welcome back, and it's time now for the Financial Week. The Supreme Court has approved Scotia Jamaica's request to hold shareholder meeting on a proposed scheme of arrangement that could see the company become wholly owned by Scotiabank Scotiabank Caribbean Holdings Limited and delisted from the Jamaica Stock Exchange. Now, if approved by shareholders and the court grants final sanction, the transaction is expected to close in the fourth quarter of 2026, after which Scotia Group Jamaica would become a private subsidiary of its parent company. In June this year, the financial institution announced plans to become a private company. This, it says, will have no material impact on its current operations. NCB Capital Markets has arranged a $600 million corporate bond for future energy source company FESCO to support the fuel retailer's next phase of expansion. The 4-year bond will be used to refinance debt and provide additional working capital as the company continues to grow its network across Jamaica. FESCO says the financing will support new service station developments and acquisitions, with plans to expand its network to 26 company-owned and dealer-operated locations by the end of this year. To some stocks news now, the JSE index advanced by 331 points today, while the junior market index declined by 21 points. The winners include Knutsford Express, Jamaica Public Service 9.5%, Caribbean Assurance Brokers, Cygnus Real Estate Finance US dollar shares, and One Great Studio. The losers they include Margaritaville Turks, Elite Diagnostic, Cargo Handlers, Ari Williams, and Caribbean Flavors and Fragrances. 28 stocks traded firm. At the end of foreign exchange trading, banks and cambios were selling the US dollar for an average $159.50. The Canadian dollar is being sold for $113.78. The pound is going for $213.85, while the euro is being sold for an average $186.90. And just before we go, we want to tell you about this particular story because customers of Jamaica's major utility companies are still facing frustrating delays and inconsistent service when seeking help. That's according to a new survey by the Office of Utilities Regulation, OUR. The OUR's 2025 Mystery Shopping Survey found that customers of JPS, the NWC, Digicel, and Flow experienced long wait times, conflicting answers to basic questions, incomplete information, and unclear escalation processes across call centers, websites, and social media platforms. The OUR is urging utility providers to adopt stronger customer service standards, including maximum wait times, faster responses on digital platforms, and better training for frontline staff. The survey, based on more than 430 customer interactions, also found that digital channels continue to underperform, with many customers still preferring in-person service for resolving complex issues. And that's the Financial Week. News from overseas when we return.